to tell me I was building a dream, and so I followed the mob. When there was earth to plow or guns to bear, I was always there, right on the job. They used to tell me I was building a dream, with peace and glory ahead. Why should I be standing in line, just waiting for bread? Once I built a railroad, made it run, made it race against time. Once I built a railroad, now it's done. Brother, can you spare a dime? Once I built a tower to the sun, brick, mortar, and lime. Once I built a tower, now it's done. Brother.
Those were powerful images from the era known as the Great Depression, which began with the great stock market crash of 1929. And the tune you heard was one of the most popular yet tragic and haunting songs of the era, Brother, Can You Spare a Dime, sung by the most popular crooner of the time, Al Jolson. Now last week, first Wall Street and the stock markets of the world all faced a crisis. Renowned, even revered financial institutions collapsed. The markets plunged. Governments seemed paralyzed, and financiers and ordinary citizens were gripped by panic. The economists and political pundits all pointed out that global finance had last experienced terror and despair on this scale almost 80 years ago with the onset of the Great Depression. But what was the Great Depression? A crash course in the crash of the markets in 1929 is our task for tonight. I'm Manolo Quezon, the Explainer. This is the Explainer, where we explain why issues are issues. Now, our explainee tonight is Yu-Shin Chuang. Did I get that right?
Yes.
Okay. She's here on a working fellowship from New York University, and did I get that right?
Yes.
Yes, okay. Now, since you've been here from the States for how long? About
3 months now.
3 months? Have you been following the news back home?
Yes, closely.
And how does it make you feel? I mean,
It's really sort of nerve-wracking, but I'm just glad I didn't become an investment banker.
okay. Now, we're also joined in our studio audience by economic law students from Arellano University who will be weighing in the discussion. But Yu-Shin, would you invite our studio audience to do as our students will be doing, which is join in the discussion?
Text react space X, your name and your question or reaction, and send it to 2366 for Globe and Sun and 231 for Smart. Or you can log on to www.the-explainer.com.
More on the Great Depression when we return. Already wobbly from the implosion of Bear Stearns and the taking over by the U.S. government of Fannie Mae and Freddie Mac, Wall Street was gripped by panic as notable institutions stumbled, with one, Lehman Brothers, falling with a great thud. Now, the great brokerage house, Merrill Lynch, was bought out, and all eyes turned to insurance behemoth AIG. And it took a U.S. government rescue to prevent full-scale panic from taking over the great stock markets of the world. Now, in this chart from the New York Times, which we'll be showing you on screen here, you can see how the Dow Jones Industrial Average plunged over here on Monday, September 15th, upon news that Lehman Brothers had failed to secure both private and public emergency loans over the previous weekend. Now, bear that in mind, the effects of what waiting for big news has on people when the weekend takes place. Now, we're going to go into contemporary goings-on in our show next week, but for a year now, a historical event has haunted analysts, policymakers, financiers, and the general public. That event was the Great Crash of 1929, which kicked off over a decade of misery known as the Great Depression. Now, to set the stage, let's go to the dizzying heights that America found itself in before the Great Crash. We can start during the era of this man, President Calvin Coolidge of America. Known as Silent Cal because he wasn't in the habit of saying much or saying anything much worth paying attention to, he did capture the spirit of his age by famously asserting, "America's business is business." Now, a passive president from 1923 to 1929, he presided over a period that's come to be known as the Jazz Age, where America turned away from the foreign preoccupations of World War I and got obsessed instead with shorter hemlines, with cocktails, daring books by Hemingway and F. Scott Fitzgerald, and wild dancing like the Charleston. Now, it was a period of prosperity and extravagance, and it was a period of great speculation in real estate and in stocks. Booming business gave another name to the era, the Roaring Twenties. Now, the invention of the telegraph and later the telephone meant that what were once purely local stock exchanges could grow much bigger, with transactions taking place faster and on an ever-widening scale. Now, since the 1880s, traders had taken to using the granddaddy of the crawler you're used to seeing on the bottom of your screen, listing stocks and their prices. Now, in those pre-digital days, what was used was called a stock ticker, a machine that printed out updates on long, thin rolls of paper known as ticker tape, which incidentally came in handy during ticker tape parades. Now, these machines had about a 15-minute delay between inputting data and the data arriving in the hands of those subscribed to the ticker tape machines. Now, remember that lag because it's going to feature in the story we're telling you tonight. Now, in the 1920s, flush with cash, and with World War I at an end, the U.S. economy boomed and people began thinking up even more creative ways to raise capital from those who wanted to make quick profits. Now, this was an era of huge pyramid schemes, which we've also looked at on this show, and it was an era of booming industry, which of course needs to raise funds, and the easiest way to do this is to sell shares to the public. Now, banks began to see how they could basically invent even newer and more creative ways to sell stocks and bonds, the debt of companies, and they began to create investment houses. So in 1928, for example, private bankers, Goldman Sachs, established an investment trust. Now, there seemed plenty of money to be made by everybody, and the more people plowed their money into the stocks and bond markets, the more it seemed possible to make great fortunes in a dizzying amount of time. Between January 1 and October 1, 1929, the New York Stock Exchange added more than 291 million shares to its list, 42.3 million shares being added in September alone with a value of $1.2 billion. And a great deal of these shares were being bought and held on credit by the big trading houses as well as investors. Now, on September 19th, 1929, the New York stock market reached a level so high it wouldn't be matched again until November 1954. Yet the signs of things to come came along almost immediately. On September 21, 1929, the market fell 9.84 points, or almost 10% in value, with 2 million shares exchanging hands in the final hour of trading alone. Now, the trading was so brisk that the ticker tape machine lagged an hour behind transactions. Now, by October, more prudent bankers and economists had begun to ask if the market could hold up with so many stocks floating around and prices being supported basically not by actual money, since so many stocks were owned on credit, but rather speculative enthusiasm. Now, you'll recall our show on the Philippine Stock Exchange, where an official told us our local market has roughly 80,000 individuals and institutions active in it. And yet this relatively small percentage of players makes news every time the market rises or falls. Now, imagine a society in which not just the big shots, but ordinary people all play the market. And imagine, in turn, the consequences of all these people, big and small, who are invested in the market, suddenly being confronted by a market collapse. Now, after a roller coaster ride from late September to mid-October 1929, the market and individual and institutional investors had become paranoid and thus panicking. Everything was simply too big, too complicated, and most of all, too uncertain. And so everyone perhaps was psychologically primed to make possible the collapse that actually took place on October 29, 1929, known as Black Tuesday. But it began the week before on Wednesday.